Barclays has just reported earnings. Jes Staley joins us now, the Barclays CEO. Jes, great to have you on the programme, as always. I know you'll want to tell me, backward-looking, how well the business has done, in your view, under the last quarter, so you can do that. But also update me on what's been happening since January, because more volatility in the market might have added some opportunity for you.
Yeah, so just very quickly on 17, we closed with profit before tax up 10%. Which we're very comfortable with. The big news of 17 really is that we ended the restructuring of the bank. There are no more assets we are looking to sell. There's no more businesses we're looking to close. We begin 2018 with a clean operating model. That's the first time in 5 years for Barclays. But also we closed 17 with a very strong capital position at 13.3%. That's above our target end state, and the first time we've done that in a long time. And what that is going to enable us to do is the announcement we had this morning that in 2018 we plan for a dividend of 6.5 pence for our shareholders. That's more than double what we paid in 2016 and 2017. So we feel good about that. To the markets, you're right. The first parts of January and February, volatility came back, as some of us had thought it might. And that is good for the markets business, but it's way too early to really give any indication. But the early start was quite positive.
So the early start was quite positive. In terms of that markets business then, Jes, what are your expectations there? You've talked about tangible equity target for the business as a whole in 2019 of 9%. Is that a challenge? Is that going to be a stretch?
You know, I don't think so. We generated a return on tangible equity of 5.6% in 17. So we have about 350 basis points to go. About 150 basis points of that are really advantages we will have in refinancing the liabilities of the bank. Credit spreads for the bank are coming in tighter. We've got a lot of expensive liabilities that are rolling off. You know, we've got higher real interest rates in both the U.S. and U.K., and that will play into that number. There's an improvement on the tax basis for us, which will play in. And non-core, very importantly, is closed. You know, we had to spend over 600 billion pounds in 2017. That will not be there in 2019. That's about 150 of the 350. Then about 75 basis points will come from reducing costs. We've given guidance that we will have costs in 2019 of about 13.6 to 13.9 billion pounds. That's well off of the run rate in 2017 of 14.2. We have very good visibility on where those cost reductions will come from. So really, in terms of earnings growth, you're looking, you can be as conservative as 125 basis points. Roughly half of that easily will come from the consumer part of our business. You know, our mortgage portfolio grew 4 billion pounds in the second half of 2017, funded by a 4 billion pound growth in our deposit base during the course of the year. And our U.S. card and German card businesses are doing very well. Our German card business revenues were up 10% in 2017. And very importantly, in our U.S. card business, our receivables were up 12% in the year.
Okay.
We've got some great new co-brand names that are doing very well. So no, we feel quite confident in our 9% or better number for 19.
So you've clearly got some cost levers you can pull, and you've set out the other opportunities for the business. What feedback are you getting from shareholders around your ability to close that 350 basis point gap then, Jes? Are they with you for the long haul? Are they with you on this journey, or are they putting you under pressure to deliver that 350 basis points quicker?
You know, we very much appreciate the support that we've got from our shareholder base. I think another aspect of the story is that they're very much looking forward to Barclays getting into a position where we can return excess capital. So hopefully our shareholders will take comfort from the fact that we are going to increase our dividend as planned in 2018, a significant amount. We're also going to be talking about, as we generate excess capital, given that we are over our in-state capital number, the bank for the first time is going to start to look at buybacks. That's much down the road, but that is something that's on the table because we recognize that we have an obligation to begin to return excess returns in greater numbers to our shareholders.
And is there a sort of a mathematical equation shareholders should look to on that, Jes? When capital gets to a certain percentage, you will start to return to shareholders. What are the metrics that you're looking at to decide when that buyback starts to happen?
Yeah, we're not putting out any mathematical formulas. You know, we like taking the dividend now from 3 pence to 6.5 pence plan for 2018. You know, we've talked about where our in-state capital number is, around 13% versus our risk-weighted assets. And let's just see how the earnings progress and how the performance of the banks progresses. But as we do generate excess capital, we do look forward to returning it to shareholders.
Can I ask you about Brexit, Jes? When you look at the UK business, how is that being impacted or not by Brexit? Do you see it in your numbers?
You know, Anna, I've been pretty consistent. Brexit is going to have an impact. It's very difficult to calculate, but I don't think it's going to have a significant impact on London as a financial center and therefore Barclays. You know, we are very much committed to Europe. It's a very important part of our business. We're one of the largest underwriters of debt capital markets coming out of Europe. You know, we have contingency plans to increase our presence in Dublin and our Irish bank subsidiary in order to make sure we can do tomorrow what we do today with our European clients. But we think London will be fine, and we think Barclays will be fine. And let's just see what happens with Brexit a year from now.
We know that the government, senior members of the government, are gathering today to talk about Brexit. Jes, does a transition deal, does that matter to Barclays? Should that be the focus of their conversations, or is it more around long-term trade for you?
I think a transition is important, and we've stated that. I think it gives the market and the industry time to absorb the impact of Brexit in a way that's orderly for both Europe as well as the UK. For sure, we'd like to keep as much connectivity with Europe as possible. We think it's good for both Europe and for the United Kingdom. So we hope that the negotiations come out in a way that there's an economic gain for both sides.
Clearly, there are a number of legal challenges facing Barclays at this time. No doubt there are limits to what you can say on those subjects. But do you find that this is taking up rather more time than you'd like, having to deal with this? How do you manage to stay focused on the day-to-day with the legal challenges hanging over the bank?
You know, one of the challenges of the bank has been to put behind us legacy legal and conduct issues. I think we are in really good, fairly good shape in terms of putting PPI behind us. I think we have put LIBOR behind us. We've put issues with the U.S. energy groups behind us in terms of the FERC. We still have two big issues still out there: the Department of Justice around mortgage-backed securities and the Serious Fraud Office around Qatar. Both of those things occurred over a decade ago, and we do hope that we find resolution in due course with both of them.
In terms of the SFO, widening their investigation and now including Barclays Bank PLC that holds the banking licenses, Jes, is there anything that you can do to limit the risks to that part of the business as you wait for the legal process to take its course? You know,
the best thing we can do is continue to run the bank as we are running it. Stock went up post that charge. Credit spreads are flat or tighter, actually. You know, it's something that happened 10 years ago. We'll let the legal system take its due course, but we think Barclays is fine.
In terms of the US versus UK, clearly you've got a big business transatlantically, Jes. Are you looking to move any of your businesses to the United States at the moment in anticipation of a lighter regulatory environment?
You know, the U.S. is about 40% of our revenues right now, so we really are a transatlantic bank. Obviously, the change in the tax rate has a benefit for Barclays. As I said, we are very enthusiastic by what we're seeing in our U.S. Consumer business. You know, the co-brand relationship we have with American Airlines, with JetBlue, the one we just launched with Uber that has enormous possibilities for the bank. So we very much like the consumer footprint we have in the U.S. And then obviously our corporate and investment bank. It's very important for us there, what we're doing in the markets business. Last year actually was a record year for Barclays in terms of equity underwriting, debt underwriting, and M&A fees. It was the strongest year ever in the United States. So there's a lot of opportunity for us there.
And update us just briefly, Jes, on what the tax changes in the United States, what the impact will be in the short and the longer term for Barclays.
We'll give guidance later this morning on what it's going to do with our effective tax rate. It will be positive for the bank, but I'll let our CFO give you all the details later.